Hello and welcome again at Stocks Advisors, and today we will talk about Virgin Galactic Holdings Incorporated, traded at New York Stock Exchange, ticker name SPCE. We can see today very strong decline and actually having this dark, ugly candle with minus 13.57% trade for company with this size. Of course, it's significant major decline. And still after hours, it's slightly negative, but just within the volatilities, let's say, so it's not meaningful. That's this small minus 0.04%. So yes, it's a very dramatic action. In general, you can say for those who started at 60, but also it's after a very beautiful grow, like a zigzagging grow that took place from November. You can see also many other stocks were growing. We had this nice zigzagging grow from the level of sub 20, then we went high to almost 30s, then we actually went down for correction, and then we went up again here. So in that sense, very beautiful grow. And now what we have kind of a major decline, and even further we go now. So I often like these kind of positions, these kind of patterns, because people usually panic on those, they exit easily, they take losses. But if you know the dynamics of these behaviors, the kind of catastrophic dynamics, how stock behaves, you can really buy in nicely and you can make a lot of profit. And it's no problem to buy. You have enough of volume, enough of stocks traded, because people just exit since they don't understand and they panic often. So what was happening here? It was happening the classical decline. The moving average 20 here started to bend downwards quite rapidly, and we had a small stop on moving average 50 by March, but it didn't hold the price decline. So it went all the way to moving average 200, working here as a classical double support and rebounding from moving average 200, but also from this support level that was formed by beginning of the year. And then the price bounced back, and again, purely classical situation when on the major decline, moving average 20 works as a resist. And indeed, it worked as a resist two times here. You can see the first time it worked by mid of March. So it's here. And second time it worked already by beginning of April here, and it's really classical. And now what we have is a accelerated decline. We are piercing this very principal support level at 23.82, and most probably we are going further, because also we don't need to forget that trading week is about to finish tomorrow. So we might still have, of course, red-white combination, slight rebounds, but most probably we will go a little bit lower. And why is this pattern beautiful for rebounds play? Because on these descending charts, let's say there is one parameter very important. It's a distance between moving average 20 and the current price. And usually it works as a very strong attractor. So moving average 20 works as a resist. On one side, you can see it worked really as a resist these two times, indicated with arrows, but also it works as a very strong attractor when and if the distance between the moving average 20 and the current price is big. And usually it should go more than 20%. Now it is, you can see 23, more than 24 even percent. So any moment the price could rebound. You can see similar example here. It was happening also. Here we had almost minus 44. What you really need to be careful is that it could go really low, but you need just to be buying at the principal levels of support, and that's what we will discuss now. So when you know these levels, you just slowly buy through them, you wait calmly, and no panic, and then you make your profit. And indeed, you just return. You know that moving average 20 will work as a resist line. You just wait and sell here, and then you just do it again. So now it's time to prepare for this again and play again with this. So how to buy here? First of all, we need to make sure that there won't be red-white combination, because you don't want to lose this opportunity to jump back. So it will be already an immediate buy at anything lower than the current price action, so within this range, which is 21 and 94, and the highest part will be 22.88. So let's write it here for us as a call out so that we don't forget it. It's 21.49 and actually 22.88. So let's put it here. This will be the first buy opportunity, so the first entry, and then we just hope for red white or kind of engulfing pattern. So if we start lower tomorrow but we finish with white candle, it might mean that we still will go to moving average 20 again to experience it as a resist most probably, but still we will be able to take our profit, and taking profit here will be advised. Usually we say it's from 10 to 15%, but here it's a very nice and fastly moving chart, so it could be from 15 to 20%. And once you have it, really take it, press the sell button, take your profit, re-enter if needed, but really do it, because the most problem what people have, they don't take profit in time, position expires and they go with losses, and then they just sit long or just exit with stop loss. To avoid this, sell in time, re-enter. To be a successful seller, you need to sell and buy many times with profit. You cannot become rich from one trade. Maybe one guy can, but this is just a casino style. It's not it's not a trading science, let's say. It's not a trading art. So with this being said, this is the first channel to buy. Of course, the price could continue lower decline, because I said it is the upwards pressure is increasing, but also on this example, by mid of March, we know that it could go a little bit lower. So we need to wait for another principal levels. And of course, the next principal level here would be just the volatility that was taking place here from 20.05 all the way to even a bit lower here till 18.96. So 20.05. 18.96 will be the next price, the next channel to buy for us. Let's write it here. And then again, it's still within the technical decline, which we might observe. And if price goes there, you just buy, and you always keep in mind that let's put it here, this pattern might take place, so the moving average 20 is your attractor. So look at it and always see the bigger the distance is between moving average 20 and the current price action on the corrective moves, on the corrections, or on descending prices with these patterns. It's just an attractor. It's just a matter of time once it will be activated. So you just need to buy through slowly at the principal levels and be almost sure that it's like 99% you will have the rebounds and very nice profit there. But also what you need to mitigate is a possible big decline due to negative catalysts. Why is that? Because on the overall descending pattern, if you on top of that you have any negative catalyst, simply speaking any kind of a news kicking in, and this would mean the price could really be thrown there, you just need to keep some funds to buy through, because again, once the moving average 20 attraction will be activated, you can make a really very nice profit. And for this, you just need to look at the very principal levels. And the very principal level here, that's why I looked at the bigger magnification here, at the smaller magnification. You can see that this is actually the level. It's between 1594 and 1738, because this was traded really long time in the summer of previous year, and also it was traded September, October. So even if there is any negative news, this will hold most probably, and this will be a very strong area to buy. It's not that we say price goes there. It's very important, because some people say, well, why do you predict to go so low? And it's not prediction to go that low. It's just we want to mitigate our risks, and if it happens, if it goes there, we want still to buy through and exit with profit. We don't want to take losses and do any kind of stop loss activities. So with this being said, yes, it's declining, Virgin Galactic, but it's creating this pattern when moving average 20 will work as an extremely strong attractor. Still might work then as a resistor once the price is attracted. It's another discussion. But for the profit target, 15-20%, even more if you're a midterm trader, you can make it with this approach should be feasible. And then how to buy through the channels. Still, it's a very classical, again, 5 portions trade. If you are watching many videos at our channel, you know what it means. It means that actually the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. You can buy with 2 portions through the second channel, meaning that you slowly buy through it. And if negative catalyst kicks in, usually we keep the remaining 2 portions for that situation. You just buy there through while people will be exiting with panic. You just buy in and prepare for really nice rebounds and making very nice profit there. So this is the approach to do. It's not always we advise 5 portions play, because sometimes it could be different. If there are more risks or less risks, you can also find those videos, but usually it's a 5 portion play. And in one videos later, I will discuss why this strategy we choose, what mathematics is behind that. But for now, just take it as it is. If you like this advice, good luck with Virgin Galactic. And actually, yes, descending, but should be rebouncing soon with very nice profitability. So good luck with it. Don't forget to subscribe to our channel, press the bell button, and see you at another episodes at our channel.